Hello YouTube and trade pros. We have another special video for you today and we're doing the exact same thing as you saw last time. We're going to continue this series and I'm going to break down what we did today. I'm going to show you guys my trades yet again. If you guys enjoy these videos and like these trades, smash that like button and smash that subscribe button to notify you when we do more of these and do go live. I want you guys to be aware that it's all not sunshines and rainbows because in today's video you can see what chasing the market emotions and impulsive trading may have done. Did we end up green or did we end up red? See if we could fight back from this first initial loss that we took. So let's go ahead and break this video down for you right away, right after this intro. So in this trade, what we could see is when we changed the screen, the market was going up. It actually broke back above a key resistance point, a key resistance area. And you can see I'm showing everyone what's going on here. This is our live trading room that I'm in and I'm recording this. So you can see it broke a resistance point. It broke the open, right? It broke back above the open, broke a key level. And I'm trying to get long down here where these three entries are. So I'm trying to get in two long at a certain level and one long at the level below. And I'm risking $187 worth of capital for at least a $400 or $500 gain. You can see where my limits are. I missed it because I saw that there was buying intent coming into this, both structurally and in terms of order flow, and I'm trying to get in on this trade, right? So I have my limits here. I'm waiting, it went. So what I do, which I normally do not do, and I don't know, I wanted this upside so badly. I thought there was more in it. I'm trying to get in super aggressively, and you can see these bids. It was kind of a silly move because these bids actually got filled, and this big red circle is a huge sell order that just went through the market. I'm still trying to get filled on three lots here. Right, I'm like 4 or 5 ticks away from literally buying this top. So we've got an extended move. I'm looking at this screen right here. You can see the market rallied about from 34. We've rallied over like 15 points, and I'm still trying to buy these tops. And you can see I get filled here. The bids come in. So I don't mind that, but the one thing that I don't notice, and I'm so stuck on this bias, is that the bids just vanish and big selling's coming in. Big sell pressure's coming in, and keep in mind, I do like the longs, but I kind of like them a little lower around the open, right? It's a break and a retest type strategy. And look, offers are coming in, bids ran away, I get filled on two, and there is some sell pressure going on. I'm kind of confident in the trade. We're up a few ticks here, and I think there's some more upside for the market to chase those offers and get the bids to push up. I get filled on my last one. I get filled on my third lot here, so now I'm long three. At this point, if my full stop gets hit, I'm down nearly 200 bucks, and I want to see how that trade shapes up. And you can see right away, boom, offers come in, and I should be scratching this trade right here. I'm getting a little hopeful and emotional about this trade. It's kind of teetering around my break even, my entry area, so I'm like, hey, you know what? I'm okay with this. And the one thing that I just did was move my take profit down to a few ticks for a scratch, positive scratch, while leaving my full stop open, which means that this is a hopeful trade. This is not what I should be doing and not what I should be in. I should have just hit that flatten button right away and just gotten out of this trade because you can see my lowered take profit is not getting hit and we're going deeper and deeper into my stop area. Long story short, we're getting the reversal. That's why you don't chase the market. That's why you don't buy tops. We're about to get a full flush for a decent little loss, just over 180 bucks down. First trade of the day, got kind of beat up on that one, but this is a good and bad thing right now that I'm about to do because number one, it's a bad thing because I am kind of impulsive and trying to get into this trade again because I believe in this bias so much, which is not good. I should not be so focused on the bias even after watching that big offer come down. But I still did like this midpoint level. I did like the middle area where my entries originally were. Now, the one thing that actually gets me into this second trade so quickly is the bids firming up and this little pop. Look at these bids. This is buyer intent firming up. The offers ran away. So this is one of the only good things about this next trade is that I actually get in a little more strategically. The entry is a few ticks below my first entry and my stops are below the bids. So this time I'm risking about 112, 115 bucks after commission, something like that, for a potential upside move of upwards of $300 because now we're down nearly 200 bucks. So we got to get some calculated trades in so we can make our next push forward, right? So I get filled here, and this is the mistake here. When you do impulsive trades and when you get stopped out and want to get back in, your entries are usually not the best. So I'm taking a little more heat than anticipated here, but my stop is protected by the bids. I think I entered too early. So if I take another stop here, I'm probably done for the day. Would be down about $300 by the end of that. So I consider that somewhat of a flat line. I take two big full stops like that. It's kind of game over for my like mentality. And you can see this trade, I took it smaller. I only did 2 lots instead of 3 because of the full stop that I took. And look, now this is something I did last time too. I got in too early and it's going against me. It's staying in the red, and I'm not flattening the trade, which is a little upsetting watching this, but it's also good because this is journal review, right? I can review these and see where I went wrong. How I should have played this was I should have been getting in at the bottoms here. I should have been getting in where my original entry idea was, and the fact that it turns around like this, number one, gives me a little more hope, which kind of blindsides my qualification, but at the same time, you're getting buy pressure. We just killed this sell imbalance. So this turns out to be a good trade. Maybe not my best trade or my best thought out trade, but we learn from this incident in terms of how to manage the impulsive trading and the emotional trading. One of the stops just got moved to break even +1. So worst case, we knock off about $12 from that loser, and then the other one. So we're in a good position. We're about to take a 9 tick take profit, 9 or 10 tick take profit. I just moved it down, so 9 tick take profit, high tick that area. While I'm trying to manage this, there's a lot of buy pressure coming. So I was right in the direction. Just the entry and the area was a little lacking, which is not the best thing to do, but as long as you're confident and manage the risk and not do it extremely impulsively, you can try a level more than once. I do that not super often, but I do it enough to understand the risks associated and how to manage. So we took one off for 9 ticks. That's approximately just over $110. We're digging our way back out of the hole, but we only have 2 lots on this one. And my target is going to be those big offers sitting above, maybe 1 tick below those big offers, somewhere around those big offers. Because if we clear them, the upside is going to prevail and we're going to continue this aggressive rally. So I moved my stop on my second one up a few ticks. It's up about a point and a bit, a point and a half, maybe a point and a quarter, and we're giving it some room. So the worst thing that could happen on the rest of this position is we take home about $60 and we're about flat on the day. So we're about break even. After commission, we're probably down a few bucks, but that's okay. And the target on this move is naturally the moon. So we could come back from this and turn this starting off loser day and impulsive day into something good. And we move the stop up a little more. So at this point, worst case scenario, we leave with like $10 on the day. So the target is I want to break this offer level. So that's the initial thought, but what I do next kind of contradicts that because I'm being more secure than I am thinking qualifiers and plans. So we trade a bit of the offer. You do get a sell imbalance there. It's not the end of the world. This candle hasn't closed and I just flattened the trade. I flattened it for a total about $275. So I'm up just around $100 on the day, maybe a bit less than that. So it's not the worst of days to have, but what happens after this is kind of, when you see it, it hurts a little, but the good thing is we didn't jump into any trades here. We didn't do anything impulsive, and look at this rip that's about to happen through that level. So this big offer is slight blockade, big buyers coming in. Next thing you know, we're up about like 3-4 more handles, and there it goes, right? It pops up through that level. That's a trade I want, and it just continues. So sometimes you got to be a little more patient, stick to your plan, because we kind of missed out on another potential $200-300 in this trade, which would have been a good day, honestly. Like, my targets aren't that high. We're going for a couple $100 a day and try to build this account up. And I hope you guys really enjoyed this video. So if you want to see more of these, just drop that subscribe button, hit that thing, smash the like button. And here's George with a message for you, how you guys can do the same thing I'm doing.
Hello, and thank you for watching this video. I want to take a moment to invite you to an exclusive online trading masterclass. In this event, you're going to learn 3 key things to help take your trading to the next level. Number 1, we're going to teach you a complete price action strategy used by professional traders on a daily basis, plus give you the checklist so you know how to check off each step to qualify the opportunities. Number 2, we're going to teach you how to use advanced order flow analytics to help you qualify high probability, low risk trade setups on a daily basis. Plus, we're going to teach you how to use that order flow to disqualify the trades that you're used to taking that end up being stopped out. Number 3, We're gonna show you how you could apply all of this information with a small account, because you could start small and scale up. In fact, that's the only way to start, and a lot of our traders are doing it in our community on a daily basis. This is an exclusive offer you could get online only at this event. I look forward to seeing you at this masterclass and teaching you these 3 secrets of highly profitable day trading. Take care and have a great day.